Folks, welcome back. Got a new fresh episode of makingrealestatefun.com. Here, Ray Manuel here with National Title Solutions, here with my illustrious co-host, I got that from Anthony by the way, illustrious co-host Keith Hoffman, and my other illustrious co-host Taji Clark. Today we're going to be talking about mortgages with our guy Keith here.
Kind of a boring subject, but
everyone needs a mortgage.
Mortgages are super exciting, man.
They are exciting because I get paid every time we get a closing.
Hey, man, anytime anybody's talking about money is exciting.
I got a big question for you because I'm in the title industry. I need you guys to be busy. What's going on right now? Why
well, that's a good question, because really, in the Chicago area, there are some things that are picking up. There's certain areas that are better than others, but it seems like with interest rates going up, it's getting a little tougher because every time they go up, people can't qualify for as much.
Yeah.
So when they do that, they're not able to purchase the same home as they could. So, somebody says, well, I'm going to wait a year because I need to save some money. Well, you know what? That house, if it goes up 5% and the interest rates go up 0.25%, they can't afford the same house as they did before. And it's been tough. But, the market's, picking up a little, so I'm busy. It's good.
Yeah, I had that conversation with a client that I'm working with a couple of days ago, actually. She was thinking, well, maybe I'll wait, and because she's having a tough time finding what she's looking for. Her purchasing amount is low, and rates are going up, so we know this. And so I just told her, I said, as rates go up and as property values go up, then the homes that you're seeing now. So you're thinking right now, the homes that you're seeing need a little bit of work. They need some, you wait 5 months, 6 months, a year from now, then, if rates go up and if the property values trend in the way that they're going now, then you're going to be seeing even less homes that are, something that you would want. So.
Oh, yeah. Well, it used to be where they'd say, well, you have to put 20% down.
Right.
You don't have to put 20% down. The mortgage insurance is in place if you put less than 20% down. But the rates have gone down, and it's really more feasible for somebody to buy a house, even with 5 or 10% down. There's a lot of programs out there with 3% down, 5% down. You can do an FHA with 3.5% down. So there's a lot of different options for people. You don't have to have 20% down in order to buy a house.
So I got an ultimate question for you. It's an A and B question. So I'm going to pull my phone out, and I'm going to pull up this app, Rocket Mortgage. Just got along. What's the difference? Why do you like it?
I'm so glad that you asked me that question.
I mean,
because
how do you compete with that?
That's like the Trulia Zillow of...
That is. So here's what happens, First of all, they have mortgage companies or banks that they use, and they actually shoot it out to them to say, okay, what's your best rate? Those people are not in your backyard. They're not qualified 100% on every program. And so when somebody says to me, that they went there, well, I can pretty much guarantee that that's not 100% guaranteed you're going to get your mortgage. I had a customer that came to me and said, well, I think I'm going to go to Rocket Mortgage, whatever it was, and they said, I'm going to get my mortgage from them because they said I can qualify for a lower interest rate. And the problem was they were self-employed and they didn't put that information in. So therefore, they didn't know that they didn't qualify for that type of loan. So you really have to work with a professional, I think, a mortgage professional, so that they actually know what you're dealing with. So you can not get screwed up and you can have that closing on time and actually get the product that you're looking for. That is one of the things that I really dislike the most.
Right.
So would it be a fair assessment if I said that with Rocket Mortgage, it's basically like an advertising site? So let's say these different bankers, pay for a spot so that somebody can go and fill out their information on Rocket Mortgage. It goes out to all these different people, and whoever reaches out to this person first that this person decides to go with, that they get the deal.
Well, and they made some changes too, in how they operate.
Okay.
Now they changed the name Rocket to Rocket Mortgage. From Lending Tree. Is it Lending Tree, I believe?
Might have been Linden Tree sounds from
So, I mean, that's their lending arm now of that same thing.
right.
Which, to me, it's like, why are you doing that? Do you have, is it a bank now that you're qualified with? Or is it that company that represents all of these companies? To me, it's almost like working with a mortgage broker versus a mortgage banker. A mortgage broker has no financial investment in it, but yet they can shop between all of these places. If you work with a mortgage banker, they fund it all, they have a higher net value, value as far as things that they own. They also fund everything, and they're responsible and they're in control. So when you're dealing with a local lender, whether it's Draper & Kramer Mortgage Corp or another one, it's much better than going online. And what I found is a lot of people go online to check out information, but yet then come back and talk to me about the mortgage themselves. So it's sort of like an informational piece versus, really getting your mortgage from them.
Right. You're right. I'm kind of a hands-on too. I wouldn't feel comfortable getting a loan from an app or someone that I didn't talk to or someone that I didn't know. I'd always go to someone that I can trust.
Yeah.
That way I can get my answers. I mean, I can get my questions answered truthfully, and they'll tell me what like it's supposed to be. You know what I mean?
Yeah. Well, like I have, like Taji, he's got an app for his phone, so he gives it to his customers. Well, I have an app for my phone. You can go on my app and I can do it. You can use mine, or I can co-brand it with Taji or another agent. And when you do that, now you have the ability to work within that company and see all the things that you need. If you want to shop for houses and you want to come to mine, you click on homes, it goes right to realtor.com. If I had a co-branded with Taji, it would be tied in with Taji's, so it would go right to his. So you can do a lot of things on these apps now that we couldn't do before.
Right.
You don't have to come in, sit down with your loan officer for an hour and discuss things. You have that option, it's great. But then there's some people that don't want to, and you don't have to do it that way.
Yeah.
Perfect.
Yeah, the thing is, there's so many different types of buyer out there. So many different type of people that are getting refinanced. So, you've got, people that are, the older ages, and they want to sit down and, have a conversation, or they want to be on the phone and all that kind of stuff. Versus, these millennials, the people that are younger and, hipsters and such, like, they just want to send a text. They want to plug their information in. They want it now. They don't really care so much about having that long conversation or sitting down. They're going to look at your reviews, on Yelp, and they're going to look at your reviews on wherever they can find reviews. And, if you've got good reviews and you can respond quickly, then you got them as a customer. So it's just a different spectrum when it comes to, the type of people that we're working with.
Well, it's all customer service. I mean, the one thing that I find is if you go to the big companies, and we're big, but we work like a small company, but we're very big. The difference is that they have things in place. So if you came to me and said, hey, I want to do a loan, one of the first questions I'm going to ask you is, what's the best way for me to correspond with you? A telephone call, a fax, an email, a text, what is it? And then I can give that information to my assistant and my processor so that they know how to contact you. I mean, I had this one person that was like 80 years old buying a house, and there's no discrimination, so they're going to get their mortgage as long as they qualify.
Right.
Here's what happens. My assistant said, hey, I'm going to email them. I said, whoa, they don't even have an email. They don't even check out their computer. How are you going to do that? Pick up the phone and call them.
Yeah.
So you have to know your customer and be able to do it. And I think more local lenders do that versus national online lenders.
Right.
Cool.
Got it.
All right. Well, I'm just making sure. Thanks, folks, for joining us on this episode. If you like what you see, check out our other episodes. Check us out at makingrealestatefun.com. Also follow us on Facebook. Where else? We're on YouTube. SoundCloud. Check us out on iTunes. Give us a review. And that's pretty much it. Cheers.
Cheers.